Hello everyone. To understand what is a provision for charges, we have first to give a general definition about what is a provision. A provision can be considered as a liability, but the difference with a simple debt is that the provision has always a part of uncertainty. For provision for charges, what is uncertain is the amount of the loss for the company. But the fact that the company will have a loss is absolutely sure. Let us now focus on the impact of provision on the financial statement. First of all, we will start with the net income. So in the net income, we will record the estimated amount of the loss for the current period as an expense. Then on the balance sheet, this amount will be, with the double party system, be balanced as a liability, and this will be reflected on the company's balance sheet. Now let us talk about the cash flow. In general, as companies, as we said, need to increase their expenses in income statement and increase the liabilities, this does not involve any cash, as we do not talk about any payment. We are now going to give some examples of provision for charges. The first one we are going to give is restructuring provisions. It is a reorganization for productivity gains of some plants of a company. For example, the company needs to open new firms or to close some others, and this takes some time, and because of this the company knows that they are going to make less profit and therefore a loss. That is why restructuring provisions are considered as provision for charges, because they represent an actual expense that is expected to be incurred in the near future rather than just an uncertain future event. Another type of provision for charges are decommissioning provisions. It is a restoration of fixed assets and the site of a company. Oil and gas companies, for example, have to set provisions after a certain time, because if they don't, some gas can escape from the places where they are extracting their oil. As these companies know that they have to do it after a certain time, they will set provision for charges, because as we said at the beginning, provision for charges are provisions where you know that you will have a certain amount, a certain loss, but you don't know when and you don't know for how much. Let's say that a company that is extracting oil had initially estimated the cost of cleaning his assets to be $1,000 and therefore recorded a provision expenses of $1,000. However, after a few years, the company found a new way that is more efficient to clean the plant, and estimated therefore a cost of only $500. In this case, the company will need to reverse the excess provision of $500. Thank you for your attention.